Hello and welcome to Web3 TV. I'm Lisa Amnagard reporting live from the Global Blockchain Congress held here in Dubai. Joining me right now is Amar Anand, founder of Auro Investment Management. Thank you so much for joining me.
Pleasure. Thanks for having me.
How's everything going today so far?
It's great, yeah. I mean, it's just been a great week, great time to be in Dubai. You had Satoshi Roundtable earlier in the week, which is one of the more exclusive conferences, and then Global Blockchain Congress, which is great, and then headed to Riyadh for Leap AI. So exciting times.
Sounds like a very busy time.
Yeah, it is. It never stops. And then Consensus in Hong Kong after that, and then ETH US in Denver, so never
It's a
stops.
back to back to back.
Yeah, basically.
So first of all, tell us a little bit more about Auro Investment Management, and I know also you are CEO of Auro Digital as well. So tell me a little bit more about these companies.
Sure, yeah. So our investment management is a fund that invests both in TradFi and in digital assets. And then Auro Digital is the venture studio and the marquee company that came out of that. So that's the old Diginex Access that was a Nasdaq-listed company, and it's one of the leading OMS, PMS platforms in the world.
And you're one of the investors here today. So can you tell me a little bit more about what kind of blockchain or Web3 projects you're looking at and what kind of trends you're seeing right now?
Yeah. So there's, as I said, so much always happening in this space, but right now we're focused on some key themes. One of them is real-world assets. So that's kind of a bridge between traditional finance and blockchain. The other big theme is decentralized physical infrastructure, so what we call DePIN. Just using, if you can think about it, like the Uberization of technology for various applications. So that's very exciting. Obviously, AI has been the flavor of the year and last year, and so that's another big theme. So I'd say, and DeFi, which kind of is at the ethos of blockchain itself, so decentralized finance, which is now really starting to gain momentum. So I think those are the big themes that we're focused on, and lots of interesting interactions around those here as well.
Definitely, and I think also when it comes to real-world assets, it's been such a big topic right now here in the UAE.
Yeah.
And I know there is one company already who's VAR compliant.
Yep.
So there's definitely momentum happening in that space. So it'll be interesting to see what happens in 2025.
No, that's exactly right. And so that's VARA compliant. So we actually, one of the most exciting things that's happened at Auro this year was the launch of our own platform. That one is compliant with European MiCA regulations and with the German BaFin regulations. Europe has been the front runner in terms of having Europe-wide regulation under MiCA, which is the market for crypto assets. That went live Jan 1 of this year. So we can talk about that, but we were at Davos at the World Economic Forum launching our own platform that is now fully licensed to issue and distribute RWA tokens across the European Economic Area under MiFID II.
And are you planning on bringing that to the UAE as well?
Yeah, eventually. So we kind of looked around the world, and Europe in this case has been a front runner. I think Dubai with VARA, and then Singapore and Hong Kong are sort of close behind. But MiCA actually launched in June of 2023. There's been a full sort of testing of that since. In June of 2024, they went live with the issuance of two types of RWA tokens. The first is called EMTs, so electronic money tokens, which are pegged by a single fiat currency. And then ART tokens, or asset reference tokens, which is what we're using in our platform to securitize everything from real estate to infrastructure to energy transition or green bonds. So those are our three sort of focus verticals right now.
And you as an investor, when it comes to real world assets, it's such a big buzzword right now. And I feel there are so many different projects when it comes to tokenization. And it's hard for people to understand what actually should be tokenized, what makes money, what's a good investment. So from your perspective, what can you say about that?
No, you're right. There is a bit of froth around the space as well. So we're focused on an area which is fully regulated RWAs. And so that bridges traditional finance, which is where I've spent most of my career, and blockchain. And so that requires you to be compliant. So BaFin is the regulator in Germany. So the bar is set very high. So you have to follow very specific standards. And there's 3 laws actually that you need to comply with: the German Banking Act, the Securities Trading Act, and the Electronic Securities Act. So we've had to study those very closely in order to be able to get a license through one of our partner companies to do this issuance. We've hired some very senior execs from TradFi. So Charlie Fippen joins us from Goldman. He spent 20 years at Goldman, UBS, and BNP Paribas, and most recently was the CEO of Water Tower Research. We've got similar folks who are kind of running the show. So there are some barriers to entry because you're dealing with sophisticated regulators that have set the regulatory bar quite high. So you have to have quite a lot of background in sort of dealing with regulators and compliance. And it's multi-jurisdictional as well. There's MiFID II, there's MiCA that's introduced, it's like a 200-page act that you need to follow.
Yeah.
So I think that limits. And so we're still early in the innings of regulated, compliant tokens. There's lots of tokens around, but that's why we're backing the fully compliant regulated space. And I think it's still early, and it's going to be very exciting to see what happens. And also with Trump coming on, some pretty exciting developments in the US we can talk about as well.
Yeah, exactly. But in your opinion, is tokenization the future of investment?
I think so. It was, we thought long and hard about, just getting involved with blockchain, because for the longest time there was a bit of an odor around the space, right? There was, I guess some of the naysayers thought that, in blockchain was a technology without any use cases. There was generally some, bad actors using it for money laundering. There was a lot of regulation by enforcement in the US under the Gary Gensler regime where, a lot of people were actually fearful about creating any innovation space. And
they didn't want to go to prison.
Basically, and I don't think any of us, especially folks with our background, we don't do well in prison. So actually there was an interesting comment in one of the panels today where one of the panelists said that having Gary Gensler as the chairman of the SEC in the US was a strategic asset for Dubai, because a lot of talent basically left the US and is now here in Dubai and has made it home. And similarly, in Singapore and Hong Kong and other regimes that were much more forward-looking.
Yeah, and they retain a lot of talent.
Yeah.
And you mentioned also DePIN earlier and likened it to Uber. So explain a little bit more about what DePIN is and the potential around that.
Yeah. So DePIN stands for Decentralized Physical Infrastructure, right? So the reason why I compared it to Uber is that, and we were early investors in Uber, and what we had to scratch our head on when we were looking at that investment was that, the entire taxi market in the US is was a $40 billion revenue pool, right? And the valuation of Uber when we were coming in was already $45 billion. And the head scratcher was that how can the valuation of this one company be larger than the entire revenue pool in the US? And the way we kind of figured it out in our models was that it created a lot of new use cases that were not existent in that pool. So everyone has a piece of physical infrastructure, in that case a car, that was sitting in the garage, and it was basically sitting idle for most of the time, and it was sweating as well because it was depreciating as it was doing that. So the big idea around Uber was, we'll take this decentralized, so many people have a car, physical infrastructure, and we'll create an application around it that can be very powerful. And so, you now have use cases that did not exist in the old taxi market. So now the same idea is being applied to physical infrastructure. So to give you a simple example that maybe you'll appreciate, so think about maps, think about Google Maps, so think about any mapping technology, right? Now it's extremely hard for one central player like Google to continuously update all of the roads and the by roads and inner lanes of every locality in the world, right, themselves. So a much better use case would be if I incentivize you, just like an Uber driver is incentivized that, hey, if you take your car from the garage and do a few rides, we'll pay you for that. So in this case, you can set up little mini antennas on your house that essentially allow, or on your car in this case, right, to go around. Anytime you're taking a drive, you turn your camera on, and they can see what is the state of that road, how much traffic is there, congestion is there right now. And so that is the power of decentralizing and using this physical infrastructure for various use cases. So mapping is one. Helium has done a fantastic job disrupting telecom operators. So it's really expensive to have, a fiber optic cable under the ground built to every house. If you can just have people put up little antennas in their houses, you can get much better network service than you do with the old system.
So it's kind of earning passive income.
Earning passive income, yeah, and just leveraging idle infrastructure that's already there rather than expensive new infrastructure that you need to build to generate better outcomes.
This is really exciting. And before we wrap up, you as an investor, you're looking at projects and ideas all the time. What are the most exciting ideas for you now in 2025?
Yeah, it's the same ones that I referenced in the beginning of the interview. So we're very focused on RWAs right now. I think also with with what Trump has done. So coming in, of course, Gary Gensler stepped down. That was an important announcement. You had the appointment of David Sachs as the new AI czar in the U.S. Very involved in the blockchain ecosystem as well. So positive development. In his first week already, there's an SEC task force that has got rid of SAB 121, which was very unpopular, where it required crypto customer assets to be treated as liabilities by custodians. So that's gone. So we now have SAB 122. So that creates a lot of new opportunities for us to invest in. He's also created an executive order to create a presidential working group where allowing much better banking access to crypto companies, which was a real problem earlier. So I think that creates disruption. I think when the US moves, a lot of the other regulators like UK, Australia, India will move. And I think if there's one thing we're watching right now is how that regulatory landscape changes, because that's going to create really exciting investment opportunities in those regions.
Definitely, because U.S. is such a big market, and also Bitcoin is traded in dollars, or it is pegged to the dollar. But in
fact, on that, one of the things that Trump did is that he has stopped the U.S. and all federal agencies from pushing CBDCs. So CBDCs is a central bank digital currency, which was very unpopular in the blockchain space because it basically becomes like Uncle Sam watching everything you're doing. Any transaction that you're doing, it was bad enough with regulation by enforcement, but if CBDCs come around, then the government can essentially monitor every activity that you do financially. So he's also put a stop to that.
So there's one thing I wanted to ask you about. While it's very positive that the U.S. are taking the proactive measures to make the crypto industry there, or the blockchain crypto industry, more clear. However, I also saw that Eric Trump teased the idea of a 0% capital gains tax for companies, but if you're a foreign company operating in the U.S., you still have to pay 30% capital gains tax.
Yeah.
So do you think that the U.S. could also threaten the business, the crypto industry here in the UAE?
Well, I think part of what Trump realized was that, this mismanagement of both crypto regulation, or I should say, all of the litigation, but also the regulation. So there was a big deficit in Congress where they just didn't make the right laws. So he realized that because of that, a lot of talent and a lot of money and a lot of potential tax on those revenues left the US. So the gloves are off. He is trying to bring back the talent that has gone to Dubai and all of these places and offer incentives to build those businesses in the US. So we are going to see some movement for sure. It's generally part of his ethos, right? So you have all of these tariffs that have now gone live, with the 10% tariff yesterday on China, and it was supposed to be 60%. He's brought it down to 10%. He's just basically negotiating with all these world leaders. There was a similar tariff on Canada and Mexico, which has been done away with now that they've had some conversation. So I think it's going to be an interesting space to watch.
Yeah, it'll definitely be an interesting space to watch. Well, I just want to say thank you so much for speaking with me. It was a pleasure.
Likewise. Pleasure having you.
And I'll be bringing you more interviews. I'm Lisa Amagard, reporting for Web3 TV.